Okay, everyone. So today what we're going to do is I'm going to review these two questions, QS 1613 and exercise 16.7. Okay, and then I've also assigned for today's class again. You need to understand how to start creating the cash flow statements. How the operating activities plus or minus your investing activities plus or minus your financing activities. So for now, we're going to focus on the finance section. Okay. So what I'd like us to do for now is just go to QS 1613. Okay. So we are done chapter 16 dealing with cash flow statements because the rest of the textbook for chapter 16 is dealing with the direct format, and we're not covering the direct format. Yeah, it's not really used in practice. Well, it is used. I mean, you can use it or you can use it. It's up to the creator of the financial statement, but most companies do use the direct format. However, for whatever reason, International Financial Reporting Standards prefer the direct format. Again, most companies use the indirect format. Okay, so let's go to QS 1613. So up to this point, okay, we've created the operating activity section and the investment section. Okay. So again, I can tell just by, again, the first thing you need to do is scan the balance sheet. Okay. So when I scan the balance sheet, okay, why would common shares go up from 80 to 190? Well, likely you've sold common shares. 90% or 100% of the time you've sold common shares for cash. Now, if that common share account went up, okay, but the company didn't sell shares, maybe it went up because instead of paying for equipment, they issued shares for equipment. But that would be indicated in the notes, okay? Or you'd be given information. Hey, equipment went up by 90,000, but it went up because they issued shares. That's a non-cash transaction. Okay. But in this case here, okay, we must have issued $110 of, or it's likely 110,000 common shares. Okay. So I'm going to start with my title, subtitle, cash flows from finance activities. Okay. So we have issuance, cash received from issuance of common shares, 110. Okay. Now I want to look at the rest of my balance sheet. So if we start at the top, cash, that's what we're trying to reconcile. We're trying to reconcile a $35 difference or a $35 increase. Okay. Now, AR, office supplies, prepaid rent, that's all going to be covered in the operating section. Equipment, accumulated depreciation, that's going to be in the investment section. AP and unearned revenue, that's going to be in the operating section. So again, what's left? Common shares, retained earnings, anything to do with financing. Okay. Again, we've reviewed already what's a finance activity. Okay. Whereas, did we retire any loans? Did we take on any loans? Did we get cash for any loans? Okay, that would be financing. And then dividends. Did we pay out any dividends? Okay. So let's look at our retained earnings. Retained earnings starts at 60. Okay. Again, sometimes you don't get the answer. You got to reconstruct the answer. Okay. So is there any dividends? Well, we were told that $30 of dividends were paid during 2020. Okay. It's not enough to just take that at their word for it. Prove that. Okay. Prove your retained earnings. Okay. So your retained earnings starts at 60. It drops to 45. Okay. So let's just say our opening retained earnings is 60. You paid out a dividend of minus 30 in dividends. Okay. And then you had net income of 15. Okay. So as a result, 60 plus 15 is 75, minus 30 is 45. Okay. So again, you proved it right there. So that net difference, 15, 30. Okay. These would be part of your closing entries. Okay. So as a result, then we know that we can payment of cash dividends, $30. So from there, we have a net cash inflow for financing activities of $80. All right, so this number is important. Now we also have two other numbers that are very important, okay? And these numbers we've taken from the question that we've done over the past week or so. So remember when we started, we also had cash inflows, sorry, it was like net cash outflow from operating activities. Again, we're doing this, I got a small whiteboard here, and I'm going to have to start erasing part of this answer. But just remember, this makes up the finance section. Okay? So go look at your answer key right here. Okay? That is the perfect statement of cash flows, or cash flow statement. So we're going to start with our operating section, which we've already done last week. Then we would go through to our finance section, or sorry, our investing section, and complete our finance section. Okay, so in the end, what you're going to have is this. You'll have your title, okay, then you'll have cash flows, from operating activities. Okay, so you'll always start with your profit or loss, whatever. In this case, then you have your various adjustments. Okay. Again, we've done all the adjustments. Okay, we should add those up. Okay, and you flow through, and you'll have, as a result, okay, 15 plus or minus whatever your adjustments are. So you'll end up with a net cash outflow from operating activities of minus 25. Okay. Now, from there, we're going to have cash flows from investing activities. So we had, in this case, we just had one thing, which was a purchase of new equipment. Okay. So that was a net outflow of 20. If there's only one item, you don't have to put net cash. Then just repeat and put net cash outflow from investing activities. Again, there's only one, so that makes no sense. Okay. So we've done the investing section, and then finally, I'm just going to copy what we did today for the financing activity. So then we'll have cash flows from finance activities. Okay. So in this case here, we had issues of common shares. So cash from issuance of common shares. Okay. And that'll be 110. Payment of cash dividends. Okay. As a result, we have a net cash inflow of 80. Okay. Now, we've done our operating activity section, our investing activity section, and our financing activity section. We're going to take minus 25 plus minus 20 plus a positive 84, and that'll be 35. So we'll have a net increase in cash for the year of 35 bucks. Okay. Now, this is how you know it's correct. Okay? Because look at the balance sheet. Notice the cash balance went from 5 to 40. That is a difference of $35. Well, an increase. Well, lo and behold, we have a net increase in cash of 35. Okay, so then we'll have our cash at the beginning of the year. It's 5. You add the 5, 35 plus the 5, you get 40, which is on your balance sheet. Okay, that's cash at the end of the year on your balance sheet. Okay, and that is the creation of the cash flow statement. If you can do that, okay, you won't have any issue on the final exam. Now, my writing isn't the cleanest, so again, please review the answer key. Again, I'm looking at the answer key as well to get, again, if this is not clear, use the answer key. Now, lastly, I wanted to look at exercise 16.7 where I said complete the finance section. Okay, so again, you already have the answer for the operating activities. You already have the answer for the investing activities. Now let's move to finance. This is exercise 16.7. Okay. So with exercise 16.7, I'm just going there. Now, again, let's read this stuff first. We have a note is retired at carrying value. Okay, that's going to be finance. The only changes affecting retained earnings during 2020 are profit and cash dividends. Well, we know the profit, okay, which was, in this case here, the profit is 103,600. Okay. So that's going to tie in Note B is going to tie into the finance section. New equipment is acquired. That's irrelevant, okay, because we would have picked that up in the investing activity section. Profit on the sale of equipment, okay, that is going to be in the finance section and operating section. Prepaid expenses and wages expense, okay, that's going to be part of the operating section. Sales and purchases, that's operating, okay. So really, we only have to look at our note payable. So notice the note payable went down from 90,000 down to 54,000. Well, think, why does the note payable go down? Well, it's sad, obviously, but 99% of the time it's because they paid off some debt. Okay, so in this case here, it says the note is retired at carrying value, so that's why it dropped. Okay, so the first thing you can do is say, okay, well, we had cash paid to retire note payable. Okay, so I'm going right to the finance section. I'm just going to erase this. Now, okay, so let's look at then doing our third section, which is dealing with the cash flows from finance activities. This is exercise 16.7. Okay, so again, please refer to the answer key as well. All right. So cash paid to retire note payable. Okay, so the note payable went down 36,000. We were given that information, and we proved it by looking at the balance sheet. And again, by now, that's the expectation where you can look at the balance sheet, look at the income statement, and start to understand the trend, why these changes have taken place. Now, we also have to look at our retained earnings now, because that's it. There's common shares. Did common shares go up? Oh, they did go up from 222 to 282. Well, what happened there? Common shares, 222 up to 282. Do we have, that must have been a share issuance, okay, $60,000. So cash from issuance of common shares. So it went up by 60,000. And lastly, we must have paid dividends. How do I know there's dividends? All right. Well, we started with 740. Okay. We have a net income of 103,600. We paid dividends, we don't know. But we ended with retained earnings of 27,180. All right. So if I add this up, I should figure out the amount that we paid out in dividends. 740 plus 103,600 minus our ending retained earnings, which is off the balance sheet, okay, will give us our dividend. Okay, so we must have paid out in dividends $77,160. As a result, we have a net cash outflow from financing activities for minus $53,160. Okay, so that then is the financing activity section. Okay, now again, I've assigned the first two parts of this question. I can't remember, what was it, last week sometime? So all we got to do is take this number, add in our operating activities of 160, 300, add in our investing activities of minus 61, 980, and we get a net increase in cash totaling 45,160. Now, let's go back to the balance sheet. We started with a cash balance of 47,000. We add those together, and we should get our ending cash balance. Now, where did I go wrong? Right, because 45,160 plus 47,000 is a total of 92,160. Okay, and again, this amount here is on your balance sheet as the ending cash balance for 2020. Okay. All right, so again, please take a look at the assigned questions, QS 1614, problem 16.3a, and I will talk to you on Monday. Have a good day.